Hello, how do you do your swing trading daily chart analysis of large cap stocks if you are using long option long swing trading strategy? You use daily chart to do the analysis, and today is February 3rd, it's March 3rd, 2025, and we are going to analyze 3 stocks on our watch list to see how they perform on Friday, February 28, 2025. So you want to analyze those stocks after the market close. And you can use daily charts. So the first one we are going to analyze is APH. And you can use either maximum daily chart or 1 year daily chart. We are going to use maximum daily chart so that we can have a bigger picture of the chart and see all our uptrend lines that we are targeting to buy that stock. So last time we purchased it was somewhere here and we sold it there. So it pulled back and then went up. So when you are looking at the maximum daily chart, we have those 2 trend lines that we like to buy at, and so it has been following this trend line and then claimed this one. So it went up and pulled back to this trend line. So let's zoom a little bit. Let's go to 1 year daily chart to see if we can see. So Friday the price went up that day, and a green bar means the price went up that day. The price at the closing of the markets in the evening was higher than the price in the morning at the open of the market, and a red bar means the price in the evening at the closing of the market was lower than the price in the morning at the open of the market. So it reached, we purchased it using short option long swing trading strategy in 2024. We purchased it and sold it there, and we have been waiting. So it pulled back to this trend line, and we have a higher low. This low is higher than this one. We don't know if it's going to continue doing that. We can wait for another one if we have a higher low. Again, after the green bar that will follow it, we can try to buy some to see. But we need to keep in mind that, let's go back to a maximum daily chart here. So when it reached, let's see, it reached a new high here, pull back, went up and reached a new high there, pull back and went up. So it has been doing that, pull back, it didn't reach the new high. So those has been on the low side until it reached a new high here, pull back and continue. So and reach a new high there and pull back. Okay, we don't know if it's going to try to come back to this trend line or not. So we can purchase some around this area, but if it decided to come all the way here, we might get stuck in it for a while. But we can wait for another higher low to give us a confirmation that it's done going down. One thing I noticed though is when it touches base with the trend line, it does not linger there. So let's make it a little bit bigger. So when it touched base with it, it went up. So when it touched base with it, it didn't really linger around that area. So let's go to the past a little bit here. touch base with that. When it touch base here, it does not dwell much there. So we can decide if today is a green bar, we can decide to buy some and see if how it plays out, if that was an early entry or if that was a good entry. And but just keep in mind that we won't be applying our own rules getting after just one higher lows here. What is having lower lows and then having one higher lows and getting, we won't be, it's not enough time that we will give it to before we get in. But let's make it red and see how it will perform during the day, and around our lunchtime we can review that. So the next one we are going to analyze is ATO. So ATO is going up. We like to buy at this trend line, but right now is going up. Friday the price went up as well. It could be following this trend line here, but we like to buy when it's down the maximum daily chart. Okay, so we like to buy at this trend line, and let's explain a little bit what our long up to long swing trading strategy is. And again, you choose upward stocks and you trace your support lines or uptrend lines, because those upward stocks, their higher lows will allow you to trace a line that is oblique going upward, and you pick some that you are comfortable buying the stock at, that has multiple touch base in the past that the price pulled back to rest on. You can pick some of those and every day do your chart analysis to compare where the price is to where the line is, and when it pull back to the line, it will be making lower lows all the way to touch base with one of your lines. And when it start making higher lows from there, you keep an eye on it. After you have about 2 higher lows, you can buy some share at the first or second green bar that follow a pullback. So waiting on to see a higher low start making around the trend line before you get in allows you not to get in too early, to have a confirmation that the stock is going down. And that's why when it touch base with the trend line, we like to wait to start seeing higher lows, that a little confirmation that is getting ready to start going up. And when you buy, you'll continue doing your daily analysis of the chart, comparing where the price is to where you want to exit. So your uptrend line are your entry point, and if you are trading upward stocks, especially large cap upward stocks, they do reach new high frequently. So you can use the next new high to be your exit point. So you'll be comparing where you enter, where the price is, to where you want to exit. And when it's getting close, you pay attention to it to decide if you want to get out or if you want to wait for that to exceed the previous high and then you sell it. But again, whether at your entry point when the chart is going up from there, or at an exit point when the chart is getting close, you can compare how the price behave around those points in the past to see if you want to wait a little bit longer to buy, or if you want to wait a little bit longer to sell. But that is the principle behind it. So if we zoom, we can see it's continued to go up and could easily make another new high. And technically, if you are using a short uptrend launching trading strategy, you could have traded around this area as well. but we are using long up to long swing trading strategy. Therefore, we prefer to wait for that to come down for us to get in. So the next one we are going to analyze is AZO. So AZO reached a new high, and it's been following this trend line for a while, has multiple touch points. Kind of neat stocks here. We only have one trend line for it. It's been following that trend line, no problem. Yeah, now all the stocks we have on our watch list has that neat trend line, easy to understand, chart, easy to understand. So, but again, within this one, you can even have a trend line there that is been following. It's been just reaching a new high. Those arrows here are 2024 us trading using short uptrend and swing trading strategy. Arrows at the bottom shows where we bought it. Arrows at the top shows where we sold. Right now, we wanted to buy it at the trend line, but for the time being, it's following this short uptrend line here, and it's not ready to go down yet. So it reached a new high on Friday, and that day the price went up as well. So this concludes how you can analyze your chart. You can do your daily chart analysis for stocks on your watch list that you want to swing trade. And in this, we found APH that could be a possible buy today, depending on how it play out today. If you have a second green bar today, we could buy. If it pull back today, then we can compare that pullback to the previous one to see if it's higher. But yeah, and it's good you analyze stocks on your watch list on a daily basis, and you can try to handpick stocks for your watch list and have about a number that you are comfortable to analyze on a daily basis within an hour. You set your entry point, and when the stocks pull back to the entry point and start going up, the entry point is the upward, the long trend line. I like to call it the valley of the mountain. When they pull back to that area and start going up, you buy some shares. And when you reach the new high, you can exit there, or depending on the stocks you are trading, or depending on where you enter, you can aim for 5% or 10%. So if you enter at the low uptrend line, you might accumulate a lot of profits while it's going up toward the next high. But if you get in a little bit higher up, then getting 5% return or 10% return might be good as well. Or if you have a higher uptrend line, like for APH, we have two. One was higher than the bottom one. So if you're getting at that level, maybe the new high could just be around 5%. You see, this is higher up compared to this one. So if you pull back to here and you start going up and you're getting around somewhere there, you'll have a lot of profit accumulated by the time you will reach the next high. But if you get in here to reach the next high, you see the distance between it price wise. Yeah, so maybe those instances, not knowing if it's going to turn around and come back down, 5% and lock it in could be another option as well. So once you are using your strategy, you are swing trading, you can take note of things you are observing and create your own rule that you like to abide by, but be flexible so that when a stocks does not align with those rules, you can make exceptions. But again, you make exception and you see if it live up to your exception or if it turn around and go back down. Choose stocks that are strong enough that you are willing to invest in long term, and you swing trade those stocks. That way, if the price turn around and goes down, you can keep them without selling them at a loss. until you just keep them in your portfolio until they become positive, and then you sell them. So, and we do have multiple of those stocks in our portfolio that we purchased, and it took a while before we sold them. So start small, one share at a time, $100 per trade, because there are some stocks that cost less than $100, $300 per trade. Whatever you can start with, you can start small to practice the strategy you are using. In those difficult times, it's very important for us not just to have our job to rely on when it comes to income to provide for our family, but to find different ways we can supplement our paycheck. And swing trading is one of those. Investing in stocks is one of those. Investing in stocks is more about taking your money and put it there for that to increase in value. Swing trading is creating a cash flow out of your money. So yes, if you have a demanding job, you cannot have a side business. Focus on investing and trading and see if you can do a little bit of those to create an income, a cash flow income on the side, that over time will exceed what you are earning from your job. But it takes a while for your account to grow from your own money you are adding to your account and for the profit from swing trading that you are accumulating there. And you can do that in your Roth IRA, or you can do it in your brokerage account to make that money readily available, accessible to you if you need to tap in it to provide for your family, or to launch another business, or to do something business related, to keep putting your money, your hard-earned money, to work. Thank you. We thank you very much for watching our videos. If you are looking for tips on how to create your own watch list of stocks to swing trade, will you please check the playlist in the description of those videos. Of this video, we have a list of playlists there that you can look at the videos that we have in them, including the one related to watch list creation. We thank you very much for your time. We thank you very much for watching our videos. We thank you very much for all your comments, and we thank you very much you all that subscribe to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel, and in soap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Thank you. Just start small and you'll get there.